Okay, we might be watching HBAR set up for something absolutely wild right now. Picture this. Institutional money is quietly stacking, technical signals are screaming reversal, but the price is still down almost 5% in the last day. This is textbook accumulation during fear. If you've been on the sidelines, the next 3 minutes might change your entire HBAR thesis. Let's break down exactly what's happening. What's up, everyone? Gold Rush here. If you're new to the channel, welcome to the crew. We're diving deep into the stories nobody else is talking about, breaking down the technicals, and most importantly, cutting through the noise to find real opportunities. Today, we're looking at HBAR from two completely different angles, and the picture is getting clearer by the hour. If this is your first time here, smash that subscribe button and turn on notifications. We're dropping analysis like this multiple times a week. Let me start with this interesting article from the Market Periodical. They just published something that caught my attention, and it's about ETF money pouring into HBAR while the price is still struggling. This is where things get intriguing. So, here's what's happening behind the scenes. Canary Capital is absolutely crushing it with their HBAR ETF holdings. According to this article, their position just bounced from a valuation of $17.67, and they're now holding 428.3 million HBAR tokens. Think about that number for a second. That's roughly 0.86% of the total supply. What fascinates me here is that this represents real institutional conviction. This isn't retail FOMO, this is Canary Capital saying, we're confident enough to increase our holdings during a downturn. And they're not alone. The article mentions that Grayscale, RX Osprey, and other institutions are preparing to enter this race. That's huge. Institutional accumulation during weakness is historically one of the best contrarian signals you can get. Now the price action, that's where it gets really interesting. As you can see in this article, HBAR is showing what's called a bullish divergence on the daily chart. Normally, when price makes lower lows, the relative strength index, or RSI, should follow suit. But here's what's happening. The price is printing lower lows while the RSI is rising. That's a divergence, and it's screaming that sellers are losing steam. The buying pressure is building underneath. The article points out that recent bullish candles showed immense buying interest, which further confirms that a reversal could be on the way. But, and this is important, those signals alone don't guarantee anything. As they note, a broader crypto rebound will likely be needed to confirm sustained upside. We can have all the technical signals in the world, but if Bitcoin dumps, we're going down with it. That's just the reality of this market. What I really like is the weekly chart setup. There's a Dragonfly doji candle forming, which traditionally signals a market turning point. For those who don't know, a Dragonfly doji is basically price getting rejected at highs and then closing near the open. It's indecision, turning into potential reversal. The article suggests that if HBAR breaks above that critical zone between 0.20 and $0.23, we could see the price revisit levels at 0.40 or higher. That's nearly triple from current levels. Now that's the kind of upside that gets my attention. The challenge? The market is still bearish right now. ETF inflows are flowing in, institutional money is accumulating, but price is still down about 5% over the past day. It's a bit of a contradiction, right? ETF money is supposed to lift prices, but it's not happening yet. That tells me two things. One, the selling pressure is still real, and two, when sentiment does flip, it could flip fast because institutions have less shares than they want. Now, let's look at this from the other side. BN Crypto just published an article that's a bit more cautious, and honestly, it's worth understanding because it outlines exactly what needs to happen for HBAR to recover. According to this article, the funding rates across major exchanges are negative, which means traders are opening short positions expecting more downside. Traders are literally betting against HBAR right now. Now here's the thing about funding rates, they're reactive. They can flip on a dime. If one big buyer comes in and liquidates these shorts, we could see a cascade of forced buying that propels the price forward. This is why shorting in cryptos can be dangerous. The article also mentions that HBAR's RSI is sitting below the neutral 50 level, firmly in bearish territory, but here's what I want to point out. RSI can recover fast. When shorts get liquidated and buying pressure hits, RSI bounces quick. The price is currently trading at 0.144 cents, and it needs to flip the $0.145 resistance into support to start a meaningful recovery. What's wild is the recovery math. To recapture November's losses, HBAR needs roughly a 40% rally to get back to the 0.200 region. Now that sounds like a lot, but in crypto terms, that's not even a wild move. We've seen HBAR do that in a single week before. The path forward is clear break, $0.154, consolidate there, then push to 0.162 and above. If that happens, the bearish thesis gets completely invalidated. The article mentions that consolidation could happen between 0.154 and 0.130 cents, which is basically price ranging while institutions quietly accumulate. That's exactly what we're seeing, sideways action with institutional money stacking underneath. Here's where both of these articles collide and create an interesting picture. You've got institutional money pouring in through ETFs, real, serious capital. You've got technical signals showing potential reversal setups on both daily and weekly timeframes. But you've also got trader positioning that's clearly bearish, with funding rates negative and RSI in the red zone. What this tells me is that we're in classic accumulation, the boring sideways phase where institutions are buying while retail traders are shorting out of fear. Eventually, one of these forces wins. If institutions get enough coins and buyers start to outnumber sellers, this thing could explode. If the broader market crashes, well, we're going down too. But statistically, accumulation phases like this often precede big moves. The fact that Canary Capital, Grayscale, and RX Osprey are all positioning suggests they see opportunity here that retail traders are missing. If you found this breakdown valuable, please hit that like button. It genuinely helps the channel grow. Subscribe and turn on notifications so you don't miss the next time something like this sets up. And if you have thoughts on HBAR's next move, comment down below. I read these and love hearing from the community. Before we wrap up, I need to include this: nothing I'm saying is financial advice. This is just analysis and my personal thoughts on what the charts and articles are telling us. Always do your own research, never invest more than you can afford to lose, and make your own decisions. This is a volatile market, and we all need to respect that. The setup for HBAR is intriguing right now. Institutional accumulation, bullish technicals, but weak momentum. The next move really does depend on what the broader crypto market does. If Bitcoin finds support and rallies, HBAR could absolutely see that 40% recovery and then some. If we crash further, this whole setup resets. That's what we're watching. Make sure to check out the other videos on the channel for more deep dives like this. I'll see you in the next one.